All right. Hello, everyone. This is the panel non-custodial versus custodial. My name is Kemal. I'm working with the team at Galloy. And I have here with me a bunch of amazing builders and developers and Bitcoiners who are working on various projects. Some of them you already know. Roy was already here. We have Roy Sheinfeld here from Breeze, who's building great self-custodial Lightning wallet for mobile. We have Max, CEO of ZK Snacks, working on Wasabi wallet, which is a self-custodial, privacy-focused wallet. We have CEO of Synonym, John Carvalho, who is developing, among many things, a BitKit wallet, which is also a self-custodial Lightning wallet for mobile. And we have Tony Giorgio from Mutiny, also a self-custodial Lightning wallet for mobile, a PWA, but I think you're also having a native app soon. And you have some mixed approach with eCash in there to make the UX better, the last mile problem that you guys talked about just in the panel about layer 2. We don't want to repeat that panel. We also necessarily don't want to talk about our project that we're specifically working on, but really maybe let's dive into what does it mean custodial? What does it mean non-custodial? Is there a difference to self-custodial? Is non-custodial just a word to scam the regulators? Any comments on that? Strong opinions, one way or the other?
I'll just say in the comparison of, obviously, custodial, I guess it's not obvious. Those words can all mean the same thing if you interpret them from the wrong direction. And so the way we try to conventionally use them is non-custodial means that you can hold it yourself. And we're trying to shift that to self-custodial because that's a little less confusing because you can say, it's easy for a person to identify with themselves. And so self means me. But custodial means somebody else holding it. But I can see how it can get confusing, but ultimately the line is whether you're holding it or not.
Yeah, I think that's a good way to put it. I mean, self-custodial, I hold the keys, right? Not your keys, not your coins. So I have my words and nobody else has control of those funds. Non-custodial means probably something like, well, I'm not custodying anybody's funds, or like from the perspective of a functionary in a liquid federation, maybe they're non-custodial, right?
That's right. It's from the perspective of the company. When we say Breeze is non-custodial, we mean Breeze doesn't hold custody over the user funds. But I think the shift to self-custody is happening because of the regulator actually using the term now self-custody in regulation documents, self-hosted wallets. Like that's a new thing now. And they're trying to prohibit people from using self-hosted wallet.
And in legal jargon, there's a difference between possession and ownership. So possession is when you control something, when you have access to it and can do with it what you want. But ownership is when you have the legal right to do that. And so in the context of Bitcoin wallets, if the possession and control via the private keys in the blockchain context and via Lightning Network channel state, if the knowledge of this information means control over the asset, and if the person who controls it is the owner, legally speaking, who stacked the sats in exchange, then that is the self-custodial option. But where control over the money and ownership is separated, so you hand over your on-chain Bitcoin or your Lightning sats to a third party who controls the private keys. Now they control it, but you still own it. And this discrepancy is where in legacy world numerous,
I mean, to even give a fourth perspective here, to make it even more confusing, to look at something like a federation, both liquid federation and then even Fedimint federation, you can even go further and say, like, is there unilateral control of the funds? Is custody defined as unilateral control of the funds? Because even when you look at Lightning channels, it's sharing a UTXO amongst two peers. You wouldn't say your other peers custodying your funds, right? It's like who has their control of the funds. just because I open a channel with another person doesn't mean they own part of the UTXO, right? It's just I have my part, you have your part. When you get into federations and that kind of like trade-off, it's like, okay, well, who technically legally owns these funds? And it's almost like in a federation where you need a majority control, it's like no one does. So is that non-custodial?
Yeah, so we can see already that there are like different angles to it. I think one major topic that is on many people's minds is the technological limitations to self-custody, right? It's a big topic right now. People are talking about changing Bitcoin to accommodate more people having the opportunity to technologically to self-custody. There are other angles to it, like self-custody does also require something from the person that wants to self-custody, at least an understanding of the necessity of self-custody. Would you agree with that? Like, can you actually self-custody without understanding the necessity of self-custody?
Well, yeah, let's break it down. You asked a few questions in a single question. Let's kind of break it down for a second. Self-custody is possible if you have an on-chain transaction. In Bitcoin today, that's the only way, and in the future, that would be the only way to self-custody your fund. You are required to have, technically it's called an UTXO, you are required to have and to execute an on-chain transaction. On-chain transaction costs money. And sometimes when the fee spikes, the blockchain fee spikes, it can cost a lot of money. So the question is, what are we doing, and can we enable people to self-custody or create a different trust model that is closer to self-custody without them carrying the entire fee of an on-chain transaction? So what was your question, Kemal?
Well, you're now talking, you're adding another angle, which is like an economic angle. Like you have to also have
because that's the problem.
the money to be self-custodial, right?
And just want to kind of to frame the problem around that's the problem. The problem is an economical problem because blockchain real estate is costly.
I was just going to ask, is a Lightning channel, which the balance is lower than the on-chain fee, is that self-custodial? You know,
That's a great question, but unless you want the crowd to shoot themselves in the face, I think we need to switch to a different question because in Lightning you can send one Satoshi, or you can send even with the low fee environment, you can send an amount that is below what we call the dust. And if you send an amount that is below the dust and it's not protected, there's no way to recover your funds because there's no way to broadcast a small transaction. Is that considered custody or not? We're doing that in Lightning because the one sats protection isn't really important. What's important is to protect the channel. And protecting the channel is what's important. There's like a trust profile that if you try to defraud me, I can recuperate my sats using broadcasting a transaction. I may lose sats if I close your channel, but at least I protected the network.
You're making sure they're not getting that sat at the very least.
Exactly, and that will prevent them from kind of applying that attack in a grander scale.
So it's basically like the ability to unilaterally go on chain is pretty much what we're defining as self-custody.
But what John kind of described, there are cases that it's not.
Well, and then mass exit attacks on Lightning, you could have a single peer that like all of a sudden it's like well, my problem with ARC and the whole ASP thing. If you have an ARC that gets like super large and all of a sudden you can't go on chain, not everyone can go on chain. Then so it's like self-custody to what limit? You know, so it's like, can everyone go on chain, or do you have a high degree chance that you can go on chain, right? So it's like, where do you blur the lines there?
Yeah, so ultimately this is an old problem, right? Custody has been around for a long time because it's an economic problem as well. And it's because transacting or transferring, moving base money like an asset is expensive. With gold, you have to move it through space, and it's quite heavy, and you need armed guards, and they need to, get food and all of these things. And with Bitcoin on chain, you need to have a computer, you need to have electricity, the time to run the computation, which isn't that much, and of course, you need to buy block space, which is out of all of this the most limited in supply, and therefore there will be a substantial cost for transferring ownership and control on the Bitcoin blockchain. And when there's a high fee, we will try to find cheaper solutions. And custody is an extremely efficient and cheap scaling solution that we've seen been used in money in the past, right? Gold vaults are ancient, and paper certificates as claims on gold are ancient tech as well. We're doing the same now with Bitcoin, with Cashew and Fediment, Jomian blind signatures as paper certificate for the base money in a centralized or federated vault. And the reason for that is because you can transact eCash 1 million times a second for literally zero cost, and it can be one sat. So the speed of transaction with custodial systems has always been way superior than any base asset that we've seen in the past, and Bitcoin is unfortunately no exception.
Basically, when you add trust from a software engineering standpoint, when you add trust, you increase efficiency.
So yeah, I think that's a good analogy. Like the gold certificate notes, right? They evolved out of a need for it, out of efficiency, but there is also some systemic risk that is tied to it. So if we want to continue that comparison, and we say these trust models, like a centralized mint, is similar to like a certificate for gold. Do we inherit the same systemic risk in those models as well, or is that a problem?
I mean, I think it can be. I think the fact that you can have like an eCash based system that can redeem immediately on Lightning, just the cost of like information, just the travel of information itself. You can just instantly go in and out of a mint, or even like Wallet Satoshi, for example. You can is Wallet Satoshi solvent? Well, I just withdrew my whole balance today and it worked, so let me put it back in and maybe it'll work tomorrow as well. So it's like the fact that Lightning pretty much allows for custodial or federated or, all of these kind of different models. It allows for people to kind of, the interoperability and then just the speed of transactions. Like you can just test like, hey, it worked today, maybe it won't work tomorrow. And then maybe everyone using it, gets rugged tomorrow. But, it worked today and we can test it out today. If we're doing something like gold, if we let's go check our banks to see if there's any gold in the vault. Like we're going to all do that today. Like we're not.
Yeah, one of my concerns with like painting custody as a spectrum of scaling for Bitcoin is like, I forgot what I was going to say now. Sorry. Somebody save me. I had a brain fart.
I think the problem is framing. Like when you say Cashew is Bitcoin, I think that's a problem. Like that's where I draw the line. And when you say custodial Bitcoin is Bitcoin, that's also problematic. We need to kind of frame the discussion. Bitcoin is only Bitcoin when it's non-custodial. There's no custodial Bitcoin. There's no custodial Lightning. Wallet of Satoshi is not a Bitcoin wallet. Cashew solutions are not related to Bitcoin, and that makes everything okay. If you want to use it, use it. Maybe you get rug pull, maybe whatever. I think the problem with Wallet of Satoshi isn't Wallet of Satoshi. I think the problem with Wallet of Satoshi is that we only have one Wallet of Satoshi. If we have tens of thousands of Wallet of Satoshi, we're great. And to your point, Tony, I think that's why we need Lightning, but then we can switch solution, kind of decide on different trust profiles, different trust level, etc., etc. But we need to understand it's not Bitcoin.
Yeah, what I was going to say is my concern is that whether these things only seem to work while nobody uses them, because they ultimately scale the same as all banking. And so the incentives behind them are the same as the old system before Bitcoin. And so it can be very, alluring to think, oh, there will just be banks everywhere. And then you start getting into evolving to like community banks, and like and it just turns into the banking system we have again eventually. And that's what Bitcoin was meant to remedy. So I always consider like this acceptance as custody as a spectrum of scaling to be like a loss for Bitcoin, because it's like adoption of banking. And yes, you can have all these tools, and everybody's welcome to use however they want, trust however they want, solve their problems as best they think. But in the end, if we're trying to design the future for Bitcoin, I would be designing it away from banking technologies, because I really think that they just scale the same as what we have today.
There are certainly a lot of similarities with traditional fiat banking, because ultimately banking is a fundamental product as well, and it's an important product that needs to be provided. Not just money warehousing, also credit and insurance, etc. And I think it's likely that we will see a combination of all of these financial banking technologies or concepts being applied in Bitcoin to support each other. Right? There can be an insurance fund for eCash mints, etc. Right, so that rug pull risks.
Then you end up with credit crashes, and again the same problems we had before.
Exactly. Like, but that's almost inevitable, right? Because there's a reason why these products are here, and they are valuable.
Can we talk about that? Like, why is self-custody on Lightning very difficult? Like, we all, there's several of us here creating wallets that are self-custody Lightning wallets. Like, this shit's hard. It's hard to get all the users to, go through those hassles and adopt those wallets and self-custody the keys. Like, the keys part, that's always been like the easiest problem, in my opinion. Just like back up your 12 words, okay, whatever. But with Lightning, there's the constant state that needs to be updated. There's interactivity. There's like the forced closures. There's the bugs and the funds that are lost because of all of that. It's shit. This shit is hard for developers to build on top of in a very UX friendly way over time. It's like hard enough for the users to be able to like go through that. So it's like, why, if we're talking about on-chain Bitcoin, it's like the answer to me is just black and white. It's like, oh, of course, like absolutely self-custody that. But when we're talking about Lightning, that's a whole other beast of complexities that it's just like, it's hard.
And I would argue it's worthwhile only because it's hard. Like, that's the self-custody and moving money without the involvement of any third party. Is hard. It should be hard, but that's how we change the future, because it's hard, because no one solved that problem. And I agree with John 100%. That's the only future that is worth fighting for.
So I'll be a little spicy, and I'll say, like, one concern I have is a lot of the reason why there's a lot of interest moving towards custodial solutions and integrating with the Bitcoin is because everybody's scared to talk about on-chain scaling. And another concern, to add on to that is, like I mentioned earlier, like is Lightning self-custodial when you can't afford the on-chain fee? Well, the truth is that if at full saturation on-chain, all off-chain things break in some way, whether it's Arc or Lightning, anything you could construct on there. And so oftentimes when I have conversations with people that have this sensitivity to talk about on-chain scaling, they say, well, just use Lightning. Like, that's what Lightning's for. Just use Lightning. But then they don't like accept that there are limits to when I can use Lightning, and there's still like onboarding problems, there's complexity problems. And they say, well, then just combine Lightning with eCash, or combine it with covenants and L-enhance, and it's just like, dude, have you implemented Lightning? Have you tried to make this a good experience?
Hybrids are possible. It took us like a month or two. So we're going that approach now.
Custody is easy. Yes.
Combining the federation's part with the self-custody part, like, to me, that's what we're kind of moving into from the Mutiny Wallet perspective. Just from the simplicity of like, okay, we have the self-custody part. It's not going to work for everyone for all value amounts and all the onboarding challenges of getting everyone to open channels and paying for liquidity and managing liquidity and things like that, right? So, but it's like, okay, what parts of your application can you smooth over by just adding the federation? And if it's just low value amounts, and then you move the user into the self-custodial part of their application, once they get enough, it's way better than onboarding people to Wallet of Satoshi and then leaving them there for years and years and years, and then all of a sudden, wait, they're not operational in the US anymore. I have my whole stack from like 5 years ago on there. So it's like we can kind of upgrade the users from a federated small amount, more trusted solution to a self-custody solution in the same app.
That's one problem with that, Tony, and that's kind of personal to you. The fact that you are focusing now on working on Fedimint instead of helping Lightning solve the self-custody issue that Lightning had, and it has self-custody, that means that there are less resources in the community that are working on improving Lightning. And we have so much work still ahead of us to improve Lightning and to build the roads and the highways that you're talking about. We need more resources in order to solve that problem. And we've came so far, and Lightning is a real thing now, and you're building on Lightning because there was a lot of energy. We were able to harness a lot of energy to solve a lot of issues with Lightning. LSPs, offline payments, like there's a lot of effort in order to solve the core issues that the trade-off that exists in Lightning. And you kind of now giving up and saying, okay, let's work on Fed.
I gotta give them credit. They do work hard on how with LDK.
No,
And we're also 3 people, so like we do what we can do.
so I'm just trying kind of to,
But they do have to split their work some amount.
Yes.
Yeah.
To jump to Tony's support here, I think like there's one thing that you say, hey, we have like this long-term thinking. We're building for something beyond tomorrow, beyond 10 years, beyond 100 years maybe, and that work needs to be done, is what you're saying. On the other hand, we also have people who are relying on Bitcoin right now. There is heavy Bitcoin adoption, mostly custodial, right? Because it's just so easy and frictionless and useful to people, even if it may not be Bitcoin, even if it's not self-custody. But it's better than M-Pesa, for example, because it's tied to Bitcoin and not to the Kenyan shilling. It's interoperable across borders, which M-Pesa is not. Just a practical example. And like, I want to read one quote here that I found, which I found interesting. I'm curious, like, what you think about it. Many haven't come to terms that Bitcoin just isn't meant for poor people, but they love to pretend like it somehow magically will be in the future.
Yeah, but I don't understand what's wrong with Wallet of Satoshi. Like, if these people are trusting Wallet of Satoshi and are willing to accept the fact that their funds are in Wallet of Satoshi, they can use Wallet of Satoshi. There's nothing wrong with that. Wallet of Satoshi, because it's more trusted, it's more efficient, and it's better, it can be, in some cases, better than a Fedimint. So why work on a Fedimint as a middle guard solution now? What problem are we actually solving?
Well, I mean, it's like what you said. Like there should be tens of thousands of Wallet Satoshis, right? Like just to distribute it out, and so that not everyone gets rugged by a single one. Or you can have all your funds across, not all your funds, but like whatever you're keeping on that can be scattered across a bunch of different Fedimints. So like, you know, the amount is like lower that you would lose if you had any problems. So it's like, I think, and then when you get into the federation perspective, it's like, okay, then it's like if Wallet Satoshi was one member of a federation, then, you know, even when Wallet Satoshi wanted to rug, they couldn't completely do that, right? There'd be other members, other businesses potentially running one with them. So it's like, I think the trust model of the Fedimint, yes, I agree to a certain extent, like, yes, like, you know, but I, at some degrees, I'm like, okay, is because Wallet Satoshi got really big and really popular, and it's like the Lightning wallet people use, like, is that a failure on like all the self-custody wallets?
When you say though really succeeded, like how many, and you say like, hey, we're preventing people with our self-custody ideology to onboard to Bitcoin, how many downloads does Wallet of Satoshi have?
But it's one of the bigger wallets. For
500,000? It's
probably around that, yeah.
downloads and not active users. So we can extrapolate like 20% usage.
Well,
That's basically nothing. Like,
the wallet of Satoshi is a good example because of what happened or how they withdrew from the U.S. And I want to go back to when Tony was talking earlier, like what you're describing with how you're combining eCash is like, it's forgetting the thing I said earlier, which is when this scales, it just turns into banking. And what that means for you is your relationship and what you described is now you're a bank and a payment processor, which means now you, when the government notices you, they're going to expect you have the right licenses and the right things in place to do that legally. Now you are a legal entity, and so you're going to be subject.
There's legal arguments against that as well that apply, but with the unilateral control.
It didn't work for Wallet of Satoshi.
Well, that's a single entity, and so the federation model flips that.
you just shift shifting the problem elsewhere. So now you're hosting a federation.
Well, and who even says that we're hosting the federation?
No, I'm sorry. You're
All banks are owned by more than one
you-
person. You know,
you enable people to bring their own federation. Now another entity needs to bring their federation. Is it a business entity? Like, what the fuck it is? Like, no one knows. And we're doing that on purpose because it's kind of a regulatory smokescreen.
I mean, isn't that? I mean, you said it earlier on the last panel. Isn't that why we're doing all of this?
well, smoke screens, the smoke clears eventually, and so it's an illusion.
It's a temporary solution.
Yeah. I had a saying similar to the one that you were quoting, which is there's no poverty in Bitcoin because you can't have Bitcoin unless you can afford to save money. And that's like a basic requirement. And again, bringing up like the on-chain relationship here, all price increase is exclusive. And so not only can people that cannot save use Bitcoin, but as the on-chain fees go up, you exclude people that can use Bitcoin. And so you always have scaling concerns. And I think that I'd be more interested to see research and finding ways to have, optimal on-chain scaling methods, and research into when it's appropriate to deploy such methods than basically adopting banking, and that's how I see it. It's just when we use the custodial stuff, we're adopting banking, and that's not progress for Bitcoin. It might be progress for like exposure to the Bitcoin price, which is what probably a lot of people care about, but it's not actually like the Bitcoin mission succeeding,
Well, I just want to reiterate that it's an extremely hard problem that humans have been trying to tackle for thousands of years. And I think a progress in banking is a progress for humanity because banking is insanely important. Right? Sure, that we can do non-banking, pure Bitcoin tech is even more amazing than anything achieved in banking. But nevertheless, there's valuable things that can and will be improved here. Like federated eCash was invented 5 years ago. Like this is baby tech, right? But it's already now insanely promising. And if we build further supporting technologies and put it together just in the right place, there will be insane efficiency improvements.
I just think what the progress is that it's banks adopting Bitcoin. It's not Bitcoin making progress.
Why not both?
Because I like holding my keys.
I guess we should have a next panel sometime else and talk about whether Bitcoin actually wants to disintermediate central banks or banks altogether. I think that would also be an interesting discussion. But for today, the time is up on this panel. Let's give a hand for all these great panelists.